Hey, what's up, you guys? Swan here from Swan Things. So, guess what, guys? I just received my I-sinar withdrawal into my bank account not too long ago. Now, for those of you who don't know yet, I-sinar allows you to withdraw a huge chunk of savings from your EPF account 1. These withdrawals used to be limited to those who have had their incomes impacted by the pandemic, but since the 8th of March, all conditions have been removed, so anyone and everyone can make this withdrawal. I made my application about a week ago, and within 4 days, I've received the money in my accounts. Now, some of you might be thinking, why on earth would I withdraw this amount from my EPF account 1? After all, if you've seen any of my older videos, you know that I think that the EPF is an excellent investment with all its advantages including capital guarantee, inflation protection, and decent returns. So in this video, I'll be breaking down my reasoning as to why I'm making this withdrawal so that you may also decide for yourself whether you should withdraw from I-sinar or not. Just a quick introduction, the government introduced I-sinar primarily to help out those who are struggling to get by giving them access to cash in their retirement accounts. Initially, this withdrawal was restricted to those who are either retrenched or have had their income significantly reduced during the pandemic. However, the recent move to remove any of these restrictions will mean that everyone can make this withdrawal even if their income was not affected. Now, the reasoning behind this change is supposedly to help everyone ease their financial burdens in these tough times. But if you look beyond this move makes sense in terms of economic policy. Now, when you flush the market with cash from retirement accounts, some people might be encouraged to spend more. And spending is an important driver for economic growth. This is a short-term win for the government because they no longer have to keep on printing money to stimulate the economy or help the needy. Instead, they simply place that burden onto you and me by allowing us to dig into our retirement accounts to satisfy our current needs and wants. But by doing so, they may end up delaying our financial problems into the future in the form of insufficient retirement savings. Now, if you ask me, there are only two good reasons to withdraw from your EPF through I-sinar. The first is obviously financial hardship. As we all know, many industries have been struggling throughout the pandemic, and many people have either gotten pay cuts or been retrenched completely. Now, if you are in this position, you may need the cash from your retirement accounts to address your immediate financial commitments. However, you do have to take note that withdrawing from your EPF accounts will mean that you are sacrificing on your future income. In fact, during the I-sinar application, they will actually show you exactly how much future money you would be sacrificing if you chose to withdraw a certain amount today. To simplify things, every 1,000 ringgit you withdraw today could have grown to 1,700 ringgit in 10 years, nearly triple in 20 years, and quintupled in 30 years, assuming you leave it to grow in your EPF at a rate of 5.5% a year. So if you take out that money today to spend, you are losing out on a lot of compounding interest. Fortunately for me, I find myself in an industry that is not too badly impacted by the pandemic. And so I have the luxury to consider reason number 2 for making a withdrawal through I-sinar. And that would be to invest the money elsewhere to gain higher returns. Now, the EPF has done surprisingly well in the past year, releasing a dividend rate of 5.2 and 4.9% for conventional and Sharia savings. However, I do feel there is a risk that next year's dividends could dip under 5%. Now, I'm usually not one to speculate or make outlandish predictions, but here are my concerns for next year's dividends. To understand this issue, let's take a quick look at how the EPF works. Basically, you can think of the EPF as a large investment bank. Over 14 million Malaysians have deposits with the EPF, with just under 8 million Malaysians actively contributing part of their salaries to the EPF every single month. The EPF in return invests all our funds into different asset classes. How much dividends the EPF is able to pay out to you and me will depend on how well they are able to invest that money for higher returns. But also, it depends on how much money they're able to invest in the first place. Now imagine that you are the head of the EPF. Money flows in and out of your accounts through contribution by members, withdrawals from retirees, and any other withdrawals allowable by EPF rules. Now, before the pandemic, you can make a reasonably accurate prediction as to how much money flows in and out, because contributions are set as a percentage of salary and withdrawal rules are clear. However, since the pandemic, you are now required to allow lower or deferred contributions from your members, as well as allowing your members to withdraw a substantial amount of their funds through I-sinar and I-lestari. This will mean that you have less money coming in and expect to have more money going out, which will mean that you need to keep a substantial portion of the funds in cash in order to facilitate this withdrawal. This will also mean that you have less money to put into investments to generate more income, thereby lowering your overall returns. Some people might say that not everyone will want to withdraw from their EPF accounts, but this might pose a problem on its own. You see, if people do withdraw from their EPF, it's true that the EPF will have less money to invest, but on the flip side, they will no longer have to pay dividends on that amount withdrawn. However, if you do predict that people will want to withdraw from their EPF accounts and you set aside a certain amount in cash to facilitate that withdrawal, in the case where people do not end up withdrawing these funds, you are still expected to give out dividends on this amount, even though that cash has been sitting there not generating any investment income. In this case, any income generated from your productive investments will have to be spread thinner to compensate for the non-productive cash. While this is not a certainty, logically it's quite plausible. Since the introduction of I-sinar and I-lestari, over 5 million EPF members withdrew a total of 35 billion ringgit out of their EPF accounts. With the recent switch to unconditional I-sinar withdrawals, the EPF is now setting aside 130 billion ringgit, or more than 10% of the total EPF funds available to facilitate these withdrawals. This, on top of the possibility of lower EPF contributions in year 2021, will mean that the EPF is in a tough position to aim for higher returns. This risk of a possibly lower EPF return, coupled with a sudden drop in the markets in the past few weeks, are some of the reasons why I chose to withdraw my EPF savings through I-sinar. It's a little bit of risk mitigation and a little bit of bargain hunting on cheaper stocks. I can always choose to put that money back into the EPF should I no longer find better investment opportunities elsewhere. Now, if you're considering withdrawing money from I-sinar, you should consider why you are doing it. In my view, there are only two good reasons. One would be to ease your current financial burden, and the second would be to invest it elsewhere to get higher return. Now, if you're interested, you can make an application through the official I-sinar portal. I'll leave a link down in the description below. The application is quick and simple, and you should receive your first payment within a week and the subsequent payments in the coming months. The deadline to apply is 30th June 2021. And that's all I have for you today. I hope you gained something useful, and I would really appreciate it if you would leave a like and subscribe to my channel if you haven't already. It really helps me out a ton. Thank you so much for watching, and I'll see you in the next video. Bye!